Good morning, everyone. I'm Steve Ankerstar, and welcome to the Ankerstar Wealth Morning Show. Today, we're going to talk about three things. We're going to talk about how if today holds up, which so far it's in the green, this would mark the fourth straight up week in the market. It doesn't seem like it, but for those of us that obviously watch it every day, we know that the S&P is like 14% off of the low. NASDAQ closer to 20% off the low. So a lot to celebrate here as far as how does the market have its footing, just more data to support that it actually does. So that's the first thing we'll talk about. Second thing we're going to talk about is an exclusive group, which is very exclusive that I don't know anyone in it, called Tiger 21, the Tiger 21 clubs. We're going to talk about what that is, because I just heard of it this morning when I was doing my research, and I thought I was like, oh, that's pretty cool. I'm gonna go ahead and share that out today, and then talk about their take on the market and what they're investing in right now. And then the last one, I have some self-made millionaire advice from somebody that wrote an article, has their own company, that sort of thing. Talking about savings rates and saving and investing. It's kind of focused towards the younger crowd, if you will, but it's certainly a speech that I used to give when I was a commander in the military, and talk about the savings rate, right? And talk about controlling spending. I even talk about that with some of the older folks. Controlling spending is a lot easier than controlling income, of course. So that's what we're going to talk about today. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimers available at ankerstarwealth.com. All right, let's go ahead and take a look at where we are in the markets this morning. Sharing out, sharing out CNBC stock futures gain. So, heads for fourth straight winning week that we talked about on the hope that inflation is peaking. So why is this happening? Well, like we talked about earlier in the week, we think we're past peak inflation, right? Which means we're past peak rate hike for the Fed. The Ukraine-Russia situation is hardly even making the news anymore, but we also know that it can't go on forever. I mean, it technically could go on forever, but, probably will not go on forever. And we have an election coming up that obviously politics will start to dominate the news cycle. Well, it kind of dominates it already, right? Depending on which far leaning news source you get your news from. But certainly as the elections approach, there's going to be more and more of just, only elections making the news cycle. So if the government is headed for gridlock, obviously we're in a blue wave right now. If the Republicans take the House and or the Senate, either one, that puts a government in gridlock. And when you look historically, markets do well during the periods in which there's a split government, because you can't have random out, from left field or right field reform get passed, right? So there's more certainty in the market, which means less volatility in the market. So that's kind of why why things are going up, in my opinion. And markets, anticipate stuff early on. So that's why it's almost impossible to time the market, because the market, it seems, wakes up one day and says, you know what? We're going to go higher based off of what's going to happen 4.5 months from now, and money flows in, and then off you go. But let's go ahead and take a look at the futures here, since we're 5 minutes to the open. So over 0.5% across the board, right at 0.5% at the Dow. So now you say, oh, well, good, we're set up for a green day. Well, caution, we were set up here yesterday too, and it kind of faded throughout the day. So we don't know what we have on our hands. That's why we don't sit here and try to predict hour to hour what the market's going to do. But certainly I do think that unless the market absolutely craters today, we're going to end up having our fourth straight up week in a row, and that's a fantastic sign going forward. All right, let's talk about this Tiger 21. What is it, you say? Well, it's an exclusive club of investors of the ultra rich. And you're like, okay. I deal with a lot of financial terms, literally daily for the past decade. So, rich is one of those terms that really doesn't mean anything, because rich to you would be one thing. Rich to me is another. Rich to, my 15-year-old would be a totally different scenario. Like you put $1,000 of cash in front of her. I don't care who you are. And she's like, okay, that person's rich, right? But for the Tiger 21 club, the minimum to be considered for the club is 20 million liquid. So it's like, okay, when you think liquid, yeah, that means not private equity investments, venture capital, distressed real estate, a lot of the higher level, if you will, I call them higher level investments that are out there that you start talking to for, I generally 1 million and above, you can start the conversation. Generally about 3 million and above net worth before you really start getting into these illiquid investments, because you have to put money away. But they're saying 20 million liquid. So for somebody to have 20 million liquid, they might have to be worth 50 million to just have the 20 million piece that's liquid. So there's this club, and this guy is the boss, and I'm sure there's a membership fee, which I was kind of hoping to come across in here. I'm like, what would that cost? And my guess, I don't know, maybe 100K a year to be part of the Tiger 21 Club. If any Tiger 21 Club member is listening and you choose to call me today, that would be fantastic, and tell me what the fee is. Or hey, you don't even give me the exact fee, give me a range, right? It's between 100K and 500K. I'd take that. So anyhow, maybe I'll look at my phone closely today to see if anybody calls. But what this person is saying, and it's one opinion, is that it's time to double down on stocks. So this person is a believer in the fact that the bottom is not only in, but we are prepped for going higher, and not only higher, way higher from here. I will say traditionally, this is the case when we have these massive sell-offs where people are bailing and going to cash, and the world is ending, and everybody's like, woe is me, and 401k crying at the dinner table all the time. When all of those emotions are in the air, people tend to overshoot. The market tends to overshoot to the downside. Cash piles build up, and then when it's time to go, go time hits, all that cash comes running back in, and some stuff screams higher. You see it in individual stocks. I've done some talking about Roblox this week. It was at $50, and then missed earnings. It goes down to $43. It was back above 50. It would hit like 52 and change yesterday. Might have touched 53. I wasn't staring at it, and then back down below 50. So I mean, there's money that's trying to find a home in a lot of stocks that have been crushed. And there's obviously, you're on the risk spectrum, you're going far out to the heavy risk side if you're involved in those investments, and that can be right for you or it could be wrong for you. I don't know, depends on your situation. But either way, the Tiger 21 Club is pushing hard for money to roll back into stocks. And why do I bring it up? Well, from an institutional perspective, which whether they're not probably specifically an institution like you would think Harvard Endowment or the police fund, pension fund, but they do swing a big enough bat to where they're moving the market. Right. I can stand in the office in front of the team and say, we're moving big into, Snowflake, or just pick a stock. We could put almost everything we have in it. We're not moving the needle for the big world, but these people are. So that's why it's interesting to hear what the big investors are saying. Obviously, this is a very bullish sign. All right. The last thing I want to talk about for you today is a little bit of it. I like self-help books. I've read them since I was a kid, which, immediately puts me off in the nerd category. But, I always thought it's interesting, how people got to where they are, the quick backstory, right? Did you save and invest your way to millionaire status? Did you start a business when you were 25 and cash out at 27? And you're just living the life, right? Or what most people think would be the life of traveling the world and backpacking. And I don't know, everybody's path is different, and you have to figure out the path for you. And maybe the path is you don't make being a millionaire a goal. That's fine. But obviously, if you're listening to this, you're probably somewhat interested in, building wealth over time. That's why you're here. So I would encourage you to read some of these stories, and you don't have to read like page over page, but I mean, just kind of get the gist. And this person here, he did start a company, worked, in finance, started this finance club. And I want to just show you this slide, which I want to make a little bit bigger. Anyhow, the title there, I'm going to have to scroll off. So give him credit. This is the Personal Finance Club, and his name is Jeremy Schneider. So shout out to Jeremy for producing this slide. But he has two people here that, modest salaries. I mean, good salaries, no doubt. But Madison makes $70K a year, and she invests $5K. Michelle earns $60K a year, so less, right? 80% of what Madison earns, but she saves 25% of her salary, which is $15K. And 25 years later, drum roll, boom, that's what they have. So you think 25 years, you're like, okay, well, can I command a 70K or 60K salary out of college? And I would say not everybody, but a lot of people can. So if you kind of continue, and you hear there's some extreme, folks out there that say live like you're a college student until you're 40. I don't know if that's the case, but I was pretty aggressive. There was a point where I was saving up to 33% of my salary as a lieutenant, just because I liked money and I wanted to have a bunch of it someday. So, Dave Ramsey says, live like nobody else so you can live like nobody else. Well, if you don't know what he's talking about, that doesn't even make sense. It's like, shut up, Dave. But he's saying live like nobody else when you're younger, meaning don't inflate your lifestyle. And if you choose to do that, then later, once you turn 40, 45, 50, there will be some time where you flip the switch and you can live like nobody else, where you can really afford anything you want because you're financially independent. So that's his point. I think this, Jeremy's point here, I think this is a fantastic slide. You know, in the punchline, it's not what you earn, it's what you keep. So obviously the math involved here is solely, you know, you can't really control your income. People are like, well, invest in yourself. Okay, yep. You're always doing that, right? And you're trying to always make more, but you may not necessarily want to leave your 60K job to make 70K if you have to move. Maybe you like your boss. Maybe you like the people you work with. Maybe you feel like you're making a difference in the world, which is all you can ask for out of a job, right? So you may not be just chasing a dollar, but it really is how much you spend with your lifestyle, your burn rate. You know, we talk about retirees and burn rates and stuff. So kind of think about this. And if you're not where you want to be, look at your own spending first. That's the easiest lever out there to change. And then, you know, focus on the rest out there. So, all right. Thank you so much for listening in. I thought these are great topics. Again, we get our questions here from you guys bringing those questions to me, whether it's emails, phone calls, or through social media. So please keep doing that. Don't forget to like and subscribe to get daily updates. That's all we have for today's show. And we will see you back on Monday. Thanks for listening.